By the end of 2024, you'll find that your hard-earned money will be worthless. Most of your investments will result in losses because the financial crisis has begun. Hello everyone, I'm Startup Life. You'll notice countless countries experiencing continuous currency depreciation. For example, a house that was originally worth $10 million US. Due to its currency depreciating by 30%, it can now be bought for only $7 million US. You'll find a country called Zimbabwe, where its stock market plummeted by 99.95% in one day due to currency devaluation. If you invested $100 million in the morning, you'd only have $50,000 left by market close. But what does this have to do with me if I don't live in those countries? Well, financial crises stem from a domino effect. When one country falters, it spreads to another, and then another. At that point, it's hard for any country to stand alone. Many people, upon hearing this, rush mindlessly to buy gold because, in prosperous times, buy antiques, in troubled times, buy gold, right? It's something everyone's scrambling for, yet why does its price plummet within a day? And why is it that assets in just one place may be on the brink of skyrocketing? If you don't want to miss out on the trend of economic recovery leading to massive wealth, you can subscribe to my channel and hit the notification bell. So, why does this happen exactly? There's a bank in the United States called JP Chase. Its assets are roughly around $300 billion US. Later, news emerged in the US that this bank not only revealed its entire wealth to short gold but also leveraged its assets 3 times over, additionally placing a bet of $100 billion US to short gold. That's equivalent to 10,000 billion. It's like borrowing 10,000 tons of gold and continuously selling it off, causing the price to plummet, then buying back the gold at a lower price. Finally, they return the 10,000 tons of gold along with interest. So, the gold they return is actually devalued. JP Chase profits from selling high and buying low. But why would they take the risk of shorting? If American capitalists want to maintain the dominance of the US dollar, they must keep the dollar strong and gold weak. There are only 2 ways to suppress gold. Firstly, raising interest rates. Because when the interest rates on savings increase, people sell gold and exchange it for dollars, causing the dollar to appreciate. The other method, as mentioned earlier, is to lend gold reserves to those capitalists, allowing them to short and sell in the market. This creates the illusion of a large number of people selling gold, causing the price of gold to drop. Then they repurchase gold from the bottom, earning the price difference. Besides adjusting interest rates, one of the financial tools in the US is manipulating the price of gold. You can think about it, people all over the world are rushing for gold. For example, a Japanese person feels that the yen is unstable, so they exchange yen for gold. Isn't this essentially shorting the yen invisibly? And when the whole world abandons their own country's currency, American capitalists come in to buy low and sell high. So, many people feel that if the world's currencies depreciate, gold and Bitcoin will rise. So they rush in to buy. In fact, there's another possibility: if all the world's currencies depreciate, gold and Bitcoin also depreciate, but only the US dollar appreciates. Can you understand? So, when many people rush in to take over, and the prices of assets are pushed down, these people will get stuck. The current situation is very similar to past history. In 2013, American capitalists set up a trap. They first had investment firms predict a decline in gold prices, then they allowed Wall Street to short gold at high levels. Many people were frightened and began selling off gold together. The price of gold kept dropping lower and lower. When those capitalists planned to buy back gold at lower levels, the risks of shorting suddenly emerged. Suddenly, a mysterious organization emerged in China, causing the gold price to rebound instantly. Their name? The Chinese Moms. This is what's called Chinese Moms bottom fishing in gold. We say that shorting fears price rebounds because once we can't buy back at lower prices and the price keeps rising higher and higher, then shorting will go bankrupt. After these people made massive purchases, the price of gold actually rebounded by about 16%. However, after a period of time, the price of gold directly plummeted by another 45%, and it continued to plummet for 7 years. In other words, if you bought gold in 2013, you wouldn't break even until 2020. So, did the moms really win the battle against Wall Street? And when we look at the current situation, does it bear some resemblance to back then? While everyone is selling gold, you'll find the Chinese people are rushing to buy gold now. If China can find a way to boost the price of gold, the Morgan family will go bankrupt as a result. But there's one thing that most people may not know: the price of gold is actually determined and driven by futures or options trading. For example, let's say there are originally 20 tons of gold in the world, but only 1 ton is available for trading. So, the buying and selling of this 1 ton of gold determines the price of the entire 20 tons of gold. From last year until now, China has purchased a total of 200 tons of physical gold, worth over $10 billion. But did you know? JP Morgan Chase's holdings of gold futures amount to tens of billions of dollars. They can issue many derivative products of gold to manipulate the price of gold. And gold currently lacks upward momentum. If you really want to buy, why not wait until it breaks through the pressure level of $2,400 before taking action? Then, assets all over the world began to fall one after another. Except for one place that has consistently been overlooked. But recently, it feels like something big is about to happen there. That's the stock market in Hong Kong. In fact, Hong Kong's stock market has plummeted nearly 60% since the beginning of the US-China trade war in 2018. Because the US wants to cut off China's external financing channels, which include Hong Kong. So, the four most profitable sectors in Hong Kong: exports, tourism, finance, and real estate, seem to have lost their competitiveness. If you're strong in exports, just increase tariffs on trade with China, preventing it from exporting. Then, in terms of tourism, Hong Kong's currency is pegged to the US dollar. Now that the dollar is so strong, people from other places will find Hong Kong expensive to visit. Moreover, in finance, just have American companies withdraw their investments and impose sanctions on Chinese-listed companies. And most of the stocks in Hong Kong are Chinese companies. Finally, in real estate, simply raise interest rates to increase the interest rates on home purchases. The goal is to crush China in the trade war and then buy Chinese assets at low prices. Because China is the world's second largest economy. And Hong Kong is the gateway to it. And now, as the trade war nears its end, it's very suitable to sell off previous assets and use the money to bottom fish the assets that have already plummeted in Hong Kong. As you can see, the overall stock market in Hong Kong used to turn downward as soon as it rose to the resistance line. But recently, Hong Kong's stock market has slightly broken through the top of the resistance line. In other words, there's a chance that Hong Kong's bear market has ended. So, my current strategy is very simple. I've basically sold off many assets that previously soared, like Bitcoin, gold, or US stocks. I'm holding on to dollars and Hong Kong dollars. Then I'll observe the Hong Kong stock market, and when the buying opportunity arises and strong stocks emerge, I'll choose to invest in Hong Kong stocks. The next video will have more insights and the truth will be revealed without reservation. If you don't want to miss out, I urge you to subscribe to my channel and hit the notification bell. We'll continue to share free information about becoming wealthy, entrepreneurs, and investors, aiming for financial freedom. I hope you can support me and selflessly share the videos. I sincerely wish those who like this video an early achievement of financial freedom. If you have any questions, feel free to leave them in the comments. As long as you can find 1 or 2 useful sentences in what I said today that can help improve your life a little, I'll be satisfied. Alright, see you next week, don't miss it, bye.